Well, crypto had its worst quarter since 2011, and it's a much more mature market than it was back then with the boom bust. So that's saying something. The S&P down 20% year to date, NASDAQ down roughly 30%. So the stock market has not seen a worse year to date since 1962. And that was when the Cuban Missile Crisis took place. And then what happened after that is we ended up in the Great Society, guns and butter, and inflation took off. But first, the stock market was a barn burner. It was very hot from 62 to 66. When it comes to bonds, this has been the worst year-to-date performance in bonds in anyone's lifetime. And by some measures, you have to piecemeal the bonds, but to try and get the record, the worst since 1788. That's more than 250 years ago. So, or almost 250 years ago. So it's been a very, very rough market for investors. We think there is light at the end of the tunnel. The light is that the Fed is getting a lot of signals that will ultimately end up in the lagging indicators called the PPI and the CPI. They're getting a lot of indicators, and I think a lot of companies are going to be telegraphing in their earnings reports this next month that we are in recession. And I do believe the Fed will do a double take.
Hello and welcome to Money Talks. In today's video, Ark Invest CEO and CIO Cathie Wood updates about the current market signals, why the Fed has become extremely aggressive and hawkish, and why she believes that the US economy is in recession after Europe and China. Cathie Wood also shares her thoughts on deflation and how it is a bigger risk than inflation, reasons behind crypto's worst quarter since 2011, and why Terra Luna experiment didn't work. Make sure to stick around till the end of this video where Cathie Wood reveals what is the best strategy for investors in this rough Bitcoin bear market. So without wasting any more time, let's dive right into this video.
I want to spend a little time on crypto. It has been an incredible month, and fears of systemic collapse have been rife in the marketplace. So we've seen Bitcoin, it peaked way back in November at 69,000, and it is now at 19,500. It is still higher than its pre-COVID 7 to 10,000 range, and it is just about at its 2017 high. So this could be some support. It's also at it is below its 200-week moving average, which is at 22,500. So there is some concern that that is the new resistance. Now, as we've seen the last month play out, talk about a reach for yield. Crypto personified that. DeFi personified that. And we knew that the Luna Terra experiment with algorithmic stablecoins was not going to work. It was backed by nothing. And I remember we did a podcast with Do Kwon. It's still on our site. And I remember listening to it twice because I couldn't understand what he was doing or saying. I am an economist by background, and so I really do try and noodle through these things, and I just didn't think that was going to work, and it failed in spectacular fashion in May, and has taken Celsius down with it, Voyager Digital, 3 Arrows Capital. BlockFi almost. It was very interesting to see BlockFi's last funding round at $3 billion. This is a lending platform. And tried to do another round recently at $1 billion. He couldn't get it done. And today it seems that FTX is going to buy it out, or it has the option to buy the equity for $240 million. A rumor this week had it at $25 million, so much better than that, but much worse, less than a tenth of its last round.
Bitcoin prices see a sharp drop in volatility as the new monthly pivots come in more narrowly from each another as they did in June. A similar pattern can be spotted between April and May, where in May, the falling knife got executed that at one point had wiped out 30% of the market cap. The risk at hand is that a similar move could happen in the coming month, as almost two hands are needed to count all the bearish signals in Bitcoin.
The bad news is that the Fed has become extremely aggressive and hawkish. The good news is that we are beginning to get data that is confirming that the economy, the U.S. economy, is in recession. And if you've tuned in before, you know that we believe that that Europe and China effectively have been in recession as well. So now a global recession. We're also getting a lot of indicators that prices are coming down. And I think this notion that the inflation that everyone has been worried about is quite a wrong way of looking at the world right now. We believe that deflation is the much bigger risk. We've been saying this for a time. We've been ridiculed for saying it. And we were challenged by those who were sure that we were back into a 70s style inflation scenario. We think that the pricing action, and I'm not just talking about stocks and bonds, I'm talking about commodity prices, crypto prices, and perhaps soon even housing prices, that many people will conclude the greater risk is deflation. And as you know, we don't think deflation is a bad thing per se. It is a bad thing the way the Fed has approached it, we believe. But deflation can be a very good thing if it is caused by technology and progress. And we think we're going to see a lot of that over the years. But right now, we're looking at bad deflation. And we're going to have to get through this. I think the next Fed move is supposed to be at the end of this month.
Bitcoin price is already mentioned in several places in a downtrend marked by death cross, where the 55-day simple moving average has broken below the 200-day simple moving average. And to make it even worse, that same 55-day SMA is working as a cap on the price action moving alongside the downtrend as a watchdog. Parallel with that declining 55-day SMA, a red descending trend line is acting as the backbone of the downtrend, forming a bearish triangle with the base at 19,036 and acts as the upper leg of a bearish trend channel with the old blue ascending trend line as the lower leg. Reading back, that makes 5 bearish elements currently hanging over Bitcoin price action and only dragging it further down.
And the Fed is out of its quiet period. So all the Fed governors have been traipsing out saying we're going 75 basis points, another 75 basis points. Well, we think that they will rethink that in this month as we get not only more pricing signals, but earnings reports and guidance from companies who will be probably confirming that the U.S. is now in recession. So bad news, good news, darkest before the dawn. We called this segment Finding Growth. We think growth is going to be scarce this year. And as you know, innovation is all about growth. Innovation is also about solving problems. We have a lot of problems now. A recession is going to be providing another set of problems. So lots of work for innovation to do. And that's where we believe you will find real growth.
Market forces called supply and demand influence Bitcoin's price. The price typically decreases when there are more sellers or vice versa. Investors carry out their commercial transactions directly as opposed to using a middleman. The peer-to-peer network removes trade restrictions and streamlines commerce. Satoshi Nakamoto first proposed the world's first cryptocurrency in 2008, which was launched in January 2009. The number of businesses accepting Bitcoin is growing daily, giving it a real market value. However, this virtual currency has been severely hampered by security issues and volatility. Even at the height of its popularity, it was challenging to find precise answers to common questions like what determines Bitcoin's value, who sets Bitcoin's price, and whether Bitcoin has an intrinsic value. The same market dynamics, i.e. supply and demand, that affect the price of other goods and services also decide the value of Bitcoin. Prices will probably rise if there are more buyers than sellers, or vice versa. Furthermore, it is essential to note that the price of Bitcoin is not determined by a single entity, nor can it be traded in a single location. Based on supply and demand, each market or exchange sets its own price.
And it's not just happening in crypto. Clarna just announced, I believe that its last round was in the $45 billion range. This is a fintech company, and it is doing around now at $6.5 billion. So big down rounds happening very quickly. We have, or we will put out today, our Bitcoin Monthly. We started it last month, and the title is Contagion versus Capitulation. And as you know, if you saw our last report, we have a lot of on-chain analytics which give us a sense of the capitulation in the marketplace, and also a sense of what is going bad out there. The transparency in the market, I think, is the reason we've seen a lot of failures very quickly.
So, do you think Cathie Wood is right about the reasons behind Terra's collapse? Tell us in the comments down below. Also, don't forget to like and subscribe. I'll see you in the next video, and thanks so much for watching.